Okay, we're live. Good afternoon, everyone that's joining the podcast, and maybe good morning, depending on what time zone you're in. This is Mark Young, and I'm delighted that you're listening to what we have to say today. We'll wait roughly a minute or so to allow people to continue to log on to the podcast before we start. But I'm delighted to have everyone join. I feel very fortunate to have Tracy Li, who's had many years in the crypto market. And I say that because the crypto market hasn't got many years of experience in it. So you have one of the OGs of the crypto world. So we're excited to have her on. And we'll start the official podcast shortly. But meanwhile, Tracy, I saw you last week in San Francisco, and it felt like biblical rainstorms because it rained every day and I was drenched. But what's the weather like out there today?
Hey, Mark, thanks for the warm intro. It's bright and sunny in California. You know, we're living up to the expectation now. It was a crazy rainstorm and many places got flooded. So we're happy to get the sun and back to our sky.
So you're telling me the week I went out there, the weather was terrible, which it was, and now you're telling me the weather's perfect, which it is.
I guess maybe that's the sign for you guys start moving west,
Or I'm the contraindicator. Whatever I do the opposite.
Yeah. How's New York like?
It's overcast. It's I'll say San Francisco all over again. It's drizzly. It'll rain for the next few days, and it's about 50 degrees, which for this time of year is unseasonably warm. So I can't complain about the temperature, but I can certainly complain about the precipitation. So wherever there's a drought, you should just send me there because I make it rain.
I'll keep that on my calendar next year. I'll tell the Department of Water Reservation. Mark is coming.
Exactly. Well, listen, it's 2 minutes past the hour, so I think we should get started. And I know there'll be people that'll continue to log on over the next minute or two, but let's please get started. So again, welcome everyone to this podcast from Bridgepoint Capital. We're going to be discussing crypto investing in the current year and current market trends. And honestly, on almost a daily basis, there's news happening in the crypto space. So it's a very timely discussion, but it also has a very short half-life on it because things constantly change. And it's exciting, but challenging. But we're delighted to have an expert in Tracy Li to give us her thoughts and comments. And also, Tracy is launching a fund in the crypto space. So we'll learn more about what she's doing, why she's doing it, and why now is the time to do it. So, Jerry, if you'd be kind enough to go to the next slide, please. Okay, you can't have a presentation without a disclaimer. So yes, this is our disclaimer. And basically, we're encouraged, we're empowered to give education. We're discouraged and unempowered, if that's even a word, to give financial advice. So this is not intended in any way to give financial advice, but to give information about what we're seeing, witnessing, and how to respond to what's happening in the market. So if you deem this investment advice, speak to your investment advisors and get their advice and counsel. But just to be crystal clear, education and not advice. Okay, Jerry, please go next slide. Okay, so yes, I'm Mark Young. I'm to the far right, obviously. A little bit about my background. You can see I'll just say the figures or JPEGs of where I've been in the past. So prior to co-founding Bridgepoint Capital, I had been a partner with Catterton Partners, and Catterton is a consumer growth private equity firm, been in business for over 3 decades, managed a pool of capital exceeding 40 billion. So very big, very long-term, very successful. And prior to that, I was in the investment office of McKinsey & Company. And McKinsey investment office, think of them as Bain Capital that spun out of Bain Consulting. So McKinsey Capital was there to create products and give advice and counsel to the 3,000 current former McKinsey partners. It just so happened that they never spun it out. Unlike Bain Capital spinning out of Bain Consulting, McKinsey Capital didn't spin. Before that, Morgan Stanley, and then I got my MBA from Harvard Business School. And more importantly, I'd love Tracy to share with the audience a brief introduction on her background and perhaps say a few words about Istari Ventures, which again is very exciting, but we'll spend more time on that later. But Tracy, the floor is yours.
Well, thank you, Mark. Thanks to everybody for tuning in for this podcast. A little bit quick background on me. I'm currently the co-founder and managing partner of Istari Ventures. Prior to getting into investment, my career has been in Silicon Valley working for different tech companies for the past 15 years. Around late 2018, I joined Coinbase, working on the institution custody part of the product. And later on, I joined a smaller crypto custodian. It's called Polysign. Most recently, before I started the fund, I was the principal product manager at Circle. I think if you guys not familiar with Circle, basically is the issuer of USDC, one of the largest stablecoin on the market. Over a year ago, around 2021, we started our fund purely investing in the Web3 world into early stage startups, typically seed, pre-seed. So also on our fund, just a brief introduction, we also have two partners. One partner, his name is Anthony. He has over 20 plus years trading experience on Wall Street, previous Barclays, HSBC, UBS. When I met him, he was a senior executive at Coinbase leading the derivative tradings. And another partner of mine is an ex-Goldman Sachs working on the M&A in the past. So that's kind of like our fund. Our fund is a 30 to 50 million fund we're raising right now. Mentioned that earlier, seed, pre-seed, and we also invest in token and equity investment in general. Back to you, Mark.
Okay, well, thank you. And I'll just say, from my experience with crypto entrepreneurs, having people with your pedigree and your time in business, you are the OGs of the crypto world. So well done, and we'll hear more about your experience and what you're seeing in terms of investment opportunities. But maybe just as a starter, if you look out over the next 3 years, and we're trying to give a vision of where the crypto market is going to go. And I don't even like using the word crypto because there's really so much underneath that between crypto coins, ledgers, TradeFi, DeFi. There's so many pieces to this, and calling it crypto, I don't think is fair. But that is my disclaimer. Where's this market headed? The good news is the last, I'll just say, week, crypto coins as an asset class, which at their peak was worth $3 trillion about a year ago. They dipped to roughly 800 billion, and now it's bouncing back. I believe the value of listed coins today is over $1 trillion, so it's had a nice bounce, but that's literally in the last couple of weeks. But as you look out over the short-term horizon, what do you see happening?
Yes, I think overall the industry is very exciting to see the rally of the Bitcoin, Ethereum, everything is trending up. I think in general in this market space, people like me, right, working in the space professionally, we're very, very bullish on the long-term trajectory of the industry. I think Mark, you're right. We talk about we call it crypto, we call it blockchain technology. But to me, think everything is basically around this new innovation of using blockchain technology to facilitate money transfer, to make a better, decentralized ecosystem. So for me, long term, we're seeing the bright future of crypto adoption, a mass adoption of using blockchain technology to help in different sectors. I think in particular on our fund, we have our thesis on the future of a fintech revolution, right? So for us, our strongest belief is in the near future, let's say next 1 to 5 years, we're gonna see a lot of new innovations surrounding by how can we make the money transfer easier. Means from point one to point B, doesn't matter what asset class, as long as you're moving money using blockchain technology, right? So that's where, as our team, we're most excited about. That can be like day-to-day use on payments, can be cross-border transactions, remittance services. So we think institutions are also going to start adopting these kind of technology in the next few years.
Well, let's talk about that a little bit more. If you look at across the world, yes, movement of money is woefully inefficient and it's painful. I actually did a wire transfer yesterday and I had to go back to the bank twice. I couldn't do it on my computer. It was a horror show, but that's the US, which in theory is state-of-the-art banking. I'll put that in quotes because it's not. But so much of the world, the developing world, is unbanked. And we all know if you can provide banking services, you can actually increase GDP, improve, people's future economic opportunities. So I'm just going to I'm going to pick a country. I'm going to say Argentina. That's a country that has hyperinflation, that doesn't have confidence in their currency, and their economy is very inefficient. What you're advocating, if you looked at Argentina and you flash forward 5 years and they were using blockchain and stable coins, et cetera, give me a success scenario. What's Argentina look like?
Yeah. So here's the story. In particular in Argentina, their inflation, as we all know in Latin America, is off the chart. So recently, a colleague of mine actually went to Argentina end of last year. One of our local founders suggested him to bring cash, right? The reason is if you go to Argentina, exchange dollar to local currency, it's about, I think, 1 to 10, somewhere there. I can't remember roughly. But basically, if you bring dollars in, you get 3 times of the local currency with cash to exchange locally. So that's what we see in like an outrageous market out there. But also just for regular people who are living there, they have shared the story with me that, let's say today you got a paycheck. Next month, it probably only worth 50% of the value a month ago, right? And then you consider, right, months after months, year after year. So that's really where we see a lot of new innovation around crypto payments and blockchain technology are coming in from these countries, because these people are just so sick of, right? Their money, hard-earned money, is not worth any money, like after a period of time. So for us, right, helping the unbanked people is one, but also just helping people in these regions having a very unstable monetary system, right, with a high inflation. How can we help them to store value, store wealth, right? That's really where we see a huge opportunity when you talk about using blockchain and crypto payments to help.
I have an old joke. I'm going to share it now. It probably won't get many laughs, but the joke goes as follows. If you're in Argentina and you get in a taxi, when should you pay your taxi fare? At the start of the ride or at the end of the ride? The answer is at the end, because of hyperinflation, it got cheaper by the time you get out of the taxi. So that's in a way, I think it's telling, because so much attention is devoted to dealing with these macro inflationary issues that people aren't devoting the proper amount of time to actually increasing wealth, increasing GDP, et cetera, because they're hamstrung by this poor monetary system they're dealing with. So there's clearly a lot of exciting things to be done to address this issue. And that it's not just the Argentinas of the world. Let's remember the U.S. has a Federal Reserve that's in a rate hike cycle because inflation is above their trend, but inflation has recently been in the U.S. over 8%, and it's making it challenging when inflation is embedded in the system, how to get people to think long-term fundamentals when they're focused on preservation of wealth.
Yeah, exactly. It's not just emerging world country problem, right? I think another region we do actually see a very similar situation hype is within the Southeast Asia market as well. Similarly, many unbanked people, right? People use cash more often, which is very different than in the U.S. Right? Primarily, we use credit cards for transactions. So basically, how are we able to help these people get access to money? That's a very kind of like a urgent problem that we can solve, right, using blockchain.
Okay, great. I'm going to ask Jerry to go to the next slide because we do have a few slides that we are here again to educate people on opportunities in crypto as Tracy, you see them now. So you've been mentioning crypto payments, and clearly this is an aspect that's interesting to your fund. But what problem are you solving for when you talk about crypto payments? You have it on the screen here, but maybe talk in a little more detail, please.
All right. Yeah. So maybe before I dive into the problem, I'll give you some kind of my knowledge right on this. Primarily from the time I was working at Circle, which is the issuer for the stablecoin USDC. During the time, right, in order to build a better product to serve the customers, I got a lot of user research phone calls with our customers at the time. So my audience were crypto startup founders, CFOs of large, e-commerce companies, like payment companies, or there's some partners or founders of remittance services. So these are the people that, basically sharing with me their problems and concerns and telling me about the opportunities they actually seen by using stablecoin can help their business to become, better, right? Saving more money and etc. So overall, right, after hearing their concerns, the problem they see, and also talking with some kind of industry leaders as well in the space, we actually found out, the majority of the larger payment companies in the world, if I have to name them, right, it's like a Visa payment, Visa, MasterCard, right, PayPal, that world of players, they're quite concerned right now for the market. Basically, crypto payments are eating their market shares. Right? If you think about payments in general, Visa, their payment rail is basically how to facilitate, right, the money transfer. Crypto, as of today, can be an alternative of that solution, which bypass the Visa rail to transfer the money to the other end of the recipients. So that's what we're seeing. These guys are, I'll say, quite worried and concerned. Right? They're losing market shares if they don't catch up. I think the other thing is I think it's the overall industry problem is we're just facing challenges of hiring crypto people, right, who have the tremendous of experience in the space. As you all know, this is a very young industry. Right? If people have worked in the space for like a year or two, they're typically the hot commodity on the market. But we really don't see that many talents. And based on my interaction with my friends and people working in the space, very difficult for, let's say, Silicon Valley tech people, want to work for a large bank, right? These are usually entrepreneur, right? They want to work for startups. So I see they're facing a huge challenge there for hiring. And also the other very, very important thing, I think, for what we have a bit understanding is the legal and compliance, right? We see a lot of regulations are coming out. typically for these companies, they have strong resistance internally from legal and compliance team to push the company moving to the crypto directions. So these are pretty much the three like really top problems we see are out there. But also, if you have when you have problems, right, you also have the opportunities, which we actually see there's a huge room for the smaller startup to be able to grow, to innovate, because they don't have a lot of legal compliance like burden in a way. They need to apply, but they just don't have that much of resistance. And typically, we are seeing the future as of these large companies I mentioned. If they cannot build right in the recent years, if they want to be competitive on the market, they have to be able to get these products, which means likely they're gonna buy these crypto startups to fulfill their portfolios. So that's kind of the opportunities we see in the future. That's also to how we think about investments as well. Is we want to put in more resources, not just money, but also like connections and expertise, helping these smaller crypto payment startups to grow, right? To be ready, or to become a good company, go to the next level.
You touched on several things in your last response, but I just want to briefly touch on regulation. And I'm not going to rehash FTX. Everyone can read the news and see what happened there. But from my perspective, when the crypto industry was launched, the idea was it was essentially unregulated, something as a way to, I'll just say, optimize against fiat currencies where central banks randomly printed money and it was debasing currency. So having something like a Bitcoin, which is a store of value, would be a better approach. But it was really, I'll just say, my words, the radicals looking to have an alternative to the monetary system. Now, something with FTX, for me, it was a game changer that there has to be some level of regulation. So the institutions you're describing, I'll just say randomly say Visa just to make a name, yes, they need to innovate, and yes, they need ultimately to build or buy to get to, I'll just say, a level of competitiveness to maintain their market. But how do you see regulation influencing and affecting this vision of crypto payments?
Mm-hmm. Yeah, I think FTX totally give everybody a quite alert, right, in a way. I think for me, even as our fund, we're actually very pro regulation. Right? I think for me, I lived through several crypto winters. I've seen many companies, fall through those cracks, and people losing money. Right? I have close friends who are losing money on these exchanges and others. It's very difficult and heartening for me to even hear these stories from my friends. I think for regulation, I think it's very similar to these housing crisis, right, around 2008. Like, you have to be able to have some regulations to protect the regular consumers. Like, I think that's the bottom line. A lot of people are getting into crypto really not knowing, the mechanisms of this industry, just put their hard-earned money into this and ended up losing, right? But we also see a lot of professional people, got trapped into these kind of situations. I definitely think regulation is going to help the industry to grow and also help to protect all the consumers and participants in the market. However, I think I do have the feeling, right, within the regulation in the US especially, are moving to the right direction, but I think it's still a little bit slow, right? If we compare to the speed of innovation in the space versus the regulation are really coming out, have certain rules for us to apply, right, for companies to apply. I just think the speed, they're not really catching up, right? In crypto, this industry, moves extremely fast. If you think tech is fast, crypto, I would say, moves 3 to 5 times faster compared to traditional tech industry, right? So you're constantly seeing new technologies and new ideas are being developed and implemented as well, right? All these nuances, it's even hard for our own professional to catch up, right? Let alone you leave um, these regulators to come up with new rules to regulate this industry. So I think there's gonna be a gap between when the regulations are actually fully coming out to help the industry versus the speed of innovation. Um, but nevertheless, I think all the startups, they should and put in time, energy, and effort of looking into how they can get their company more compliant. I think we see a lot of crypto KYC companies, anti-fraud companies, and solutions are coming out. I think that will help the industry. Um, I think, for especially like we're looking at the payments or crypto, fintech sector, um, companies need to have the proper licenses, right, in different jurisdictions. I think these are the right thing to do. Right? They need to start thinking about this from literally the earliest possible when they're launching a company, rather than wait, right, until they have to do something. So that's kind of the overview, right? When we think about regulation, it's definitely 100% needed. If we can push the Congress or the regulator to move faster, that would be a much better trajectory.
Well, I 100% agree with what you're saying. Let me just add to your comment. I see the U.S. as number one. It's the reserve currency of the world. It's essentially the financial hub of really guiding the world in terms of monetary policy and regulation. So the U.S. has to lead the charge here, and it's in their financial interest to continue to be the global financial hub of the world. We have the deepest, equity markets. This is where people come to list. This is where capital is raised. And let's be honest, it's the reserve currency of the world. Today, the U.S. debt to GDP is 120%. So it's grown dramatically, but yet we can issue our bonds and finance our deficit fairly easily because we're the reserve currency and we're the market leader in financial innovation. But regarding crypto, you're right. There's a lot of talk, but not a lot of action. So that I'll just say the U.S. regulators have to up their game here a little bit.
Yeah, I overall, right, the U.S., I will say, kind of the reason for a lot of people move to the U.S., right? They are holding this American dream. Personally, I grew up in China. I moved to here because I think it's a better future for me, especially in Silicon Valley. I was prior like a startup founder as well, right? To me, to think there's no better place in the world providing that much of resources, opportunities like the U.S. for tech startups. So I think the crypto innovation in general, it's still started in the U.S. A majority of the high quality crypto companies we see today are still US based. And some, I would say, some of the overseas crypto startup founders are actually all US educated. Right? Recently, I talked to many like Asia-based founders, Latin America-based founders. They went to MIT. Right? They went to Stanford and Harvard. Right? These are actually the people who are building crypto startups after they left the US, went to their home country. So to me, I still think America is leading the world in all different factors. Right? Within crypto, it is very slightly sad for a lot of industry people to see, right? The U.S. is not moving as fast as we want it to be, right? We think crypto is really gonna change the monetary system and financial system in the future. I do urge people start to have a little bit better understanding about the space. That will, I think, help the overall adoption, but helping the nation moving forward as the tech leader in the world.
Well, you're here to help us educate the U.S. market and, frankly, global markets. So, and you're doing a wonderful job of that. So, thank you. I'm going to ask Jerry to go to the next slide. We do have 3 slides that we're going to cover on this podcast. So, innovations in payments and banking. So, I'll just say here you've listed out what I'll call use cases or killer apps for payments and banking, but maybe you want to just walk us through this a little bit?
Yeah, absolutely. So I think when we talk about, changing the innovation in payments and banking, you cannot stress how important stablecoin is. So this is a fantastic kind of innovation. Right? Stablecoin, if you're not familiar, which is basically one-to-one backed by a local currency. So now I think I want to more focus on the US based, which I mentioned USDC before, which is one of the most adopted US based stablecoin. They're one-to-one dollar peg, which they use, US assets like T-bill and US based kind of instrument to back this stablecoin to remain one-to-one, ratio to a US dollar. So this innovation basically enabled, to do payments. I'll say the early days. Basically, recently, a friend of mine, Bala, he's the Fidelity Venture VC, reminded me, the initial Bitcoin white paper is basically mentioned they are trying to build a system to make payment much faster and easier to transfer from party A to party B. Right? That's the fundamental of how Bitcoin was invented. But the early history was, for different reasons, Bitcoin could not adopt as a payment solution. And later on, we realize now stablecoin is going to be the vehicle for making payments, right? Helping the banking system in general. So here we list out several benefits of why using stablecoin is a better solution, right? I'll quickly go through this. For stablecoin, right, it's still part of crypto, so it's very secured because there's different cryptographies were involved to secure this technology, and also very unlike to the traditional, right, like banking sector. You have bank holidays, you have weekends off, right? For crypto, it's 24/7 and every single day of the year, right? Which basically means for payments, there's nothing can be stopped as long as you want to, transfer money. And also something more technical is called a cross-chain interoperability. It's basically there are so many different blockchains, right? For the stablecoin, basically means they can transfer on every single one of them. That's eventually the goal we're trying to achieve. And also, right, really the use cases is transfer money for cross-border payments, peer-to-peer, e-commerce, actually FX, right? These are going to be some of the examples. But basically, that's what we're seeing, right? The benefits of using stablecoin. And if we look at really the growth potential, as I mentioned, right, USDC is the most we see the reputable stablecoin on the market. And for USDC was only launched in the middle of 2018, right? So as of today, it's a stablecoin currency less than 4 years old, right? So think about how early we are in this, new crypto payment world. And even though it's a short period of time, we have seen USDC going to the market cap. I think as of this year, it's around 46 billion, somewhere like that. right? But also this is after a huge, market crash. And we're, there's some numbers projecting for the future, right? We're gonna see probably by 2025, we're gonna see stablecoin taking over $1 trillion market cap. So this is really, I believe, the core and the center where we're gonna see the bulk of innovation using stablecoin to transfer real assets value.
Okay. I'm going to ask Jerry to go to the next slide just because I want to make sure we cover everything in the hour that we have available. So before you explain the slide to us, I'm going to essentially say why now. But we went from, I'll just say, a bullish crypto market, and then the market fell out of bed. So we went from bull to crypto winter, and maybe now we're on the upswing again. Time will tell. But when you look at investing today and you have a fund that's investing today, why now? Why is this the right time?
Yeah, so I think I'll just really go to the punchline. Why now is we're seeing this as a generational opportunity to generate wealth, right? So for us as a venture fund, we're looking for returns. So the bear market is typically where you see the best opportunity for investments, right? Overall, across the board, we're also seeing crypto startups valuations dropped like significantly. I think if many people are familiar with the traditional investment, right, we call them Web2 investment, crypto, we call them Web3. So people don't, I'll say a lot of Web2 investors are not familiar is during the bull market last year, we see like a seed round valuation can go up to sometimes, $100 million post money for seed, right? Let alone, we have seen like $1 billion Series A valuation in the bull market. That just sounds crazy for everybody. So in this market, we're definitely seeing people are getting realistic about the market, about the return, about the valuation. So right now we're seeing valuation for seed round crypto startups, right? Even with a really good founding team, right? Let's say ex-Coinbase engineers and these kind of great team, we're seeing valuation is around 10 to 20 million post money. Right. Thus, we see this is a fantastic time to grab some of the, solid startups to invest. And also, I think the other very pro-investor situation is for us as VCs, we have a much longer time to do due diligence. Right. In the previous market, I will say there are some cases. I work with some very well-known crypto VCs. Sometimes their due diligence is within a day. They have to decide. They have to make decisions. Are we going to invest within a day of the turnaround time? Which is also because of market, right? People are competing. VCs are competing to invest. As startup founder, they had the most leverage in those bull markets. Right now, we're seeing the market literally flip. Founders are knocking on doors and lower their valuations, and the VCs, are taking their time to do more thorough due diligence. I think that's really a great news. You don't want to invest in the crypto startups making decisions within like 10 hours, right? Like, just crazy to think about. That's actually happened, right?
I would call it a train wreck waiting to happen, and it did.
Yeah.
And now I'll just say the discipline that investors applied to other markets is now being applied to crypto. So valuations come in to realistic levels, diligence is being done on a proper basis. So the industry is maturing. Is the way I would characterize it.
Yeah, exactly. I think the industry have gone through several cycles. This is arguably the most, severe crypto winter by far, we are seeing, the whole industry is kind of being forced, have to learn, right? Have to be more mature, have to move on, have to step up their games for VCs and also for startup founders.
Let me just build on that comment, if I may. And I still remember from my Wall Street days, the four most dangerous words on Wall Street are "it's different this time." That's deadly. It's different this time because, frankly, people that have seen investment cycles, they tend to be similar and they tend to happen. So I'm going to use an example of e-commerce. In 2000, the internet e-commerce bubble burst, so valuations were destroyed. NASDAQ from peak to trough, I'm making up numbers, was down about 75%, so similar to what we witnessed in crypto. But 2000 gave rise to firms like Amazon, which last year was the highest valued company in the world. I don't know where it is today, but it's in the top 5. So out of this dislocation, if the business fundamentals are sound and investors essentially get their act together, there's enormous wealth to be made during these corrections. So you're articulating use cases here that make a lot of sense to improve economic performance. So there are going to be some big winners here. And valuations have come in dramatically. So there's a lot of wealth that's also going to be created here. So when you look at investing, I'm just going to ask you an unfair question, but when you think about the dollar in to the dollar back out, which is what investors care about, right? They're in it for return. Under a success scenario, what do you think can happen to these early stage businesses you're investing in? Where do you see the exit multiples on these things?
Right. So here in crypto, I will say there are two types of investments. There's one is equity, which is very similar to the current, traditional investment model for most companies. It's an equity round. They're getting priced until they raise the next round of money. There's also another type is token investment in the crypto ecosystem. These two are slightly different in terms of liquidity events. So I will say the token side typically has a shorter liquidity event cycle, right? So this is what we call it within the industry is lockup period. So typically when a company issue you a token, we have seen 2 years or 3 years lockup. Basically means you can sell 100% of, your as a VC, right? How much you're holding within the 2-year lockup period. 100% you can exit, get liquidity out of it. And then typically there's a 6 months or 9 months cliff, which means you cannot sell for the 6 or 9 months. So typically in these events, I would say in the past, what crypto VCs were shooting for is they're hoping for 100x returns on tokens, right? So that's why you see a lot of, investors are flushing money into the space. The market has definitely changed. We see a lot of startups are waiting to launch their tokens, right? Which means the liquidity event is going to be delayed if they don't have token on the market. I can only roughly give a guess, right, on the token returns. I will say 20 to 50x, right? That's what we're hoping for. Could be, if a successful company, could be more for sure. Are we gonna see a lot of 100x returns? I doubt it, but never say never. There might be companies still doing a fantastic job, and this is also the early stage. We might see some of them still happening, but I will see majority of them are gonna be a little bit lower on the multipliers.
Well, either way, 20x, 50x, 100x, those are just astounding results. And you're LPs investing in your fund who, if they achieve that type of financial return, are going to be delighted. Okay, that's just very impressive. I'm going to.
Yeah, absolutely. I think that's why you see people are, I would say a lot of traditional investors are jumping into crypto investment as well, because they see the high returns, especially if you invest into early stage companies.
All right, I think maybe we can move on to what types of investments you would find attractive. So firstly, Jerry has a question on the screen here. I'll just read the question for the audience, but it says, what are you looking for in a crypto payment project? How do you filter these projects in an early stage? So I'm knocking on your door. I have a crypto payment project. How do you decide if what I'm pitching you is worthy of your investment consideration?
Yeah. So for these type of applications, I think there are a few areas we're looking at. I think first and foremost is really come down to, are they actually solving the problem even in the payment space? Do they see there's a current market need for them to build that type of applications? I would say, for example, even in payments, we have seen some I'll say some crypto startups, let's say, they want to build a forex solutions, right? Basically thinking about in the future, each country have their own stablecoin. The benefit we're seeing is, instead of the traditional market you do FX, there in the future I'm seeing a potential of you can do FX with different local currency backed stablecoin. Right. For us, let's say these kind of opportunity, how we evaluate is that ready, right? So we see, because the reason is the crypto market is moving, but we're also making a lot of assumptions. A lot of adoptions haven't occurred. For stablecoin, only the US market is relatively mature, right? For let's say Thailand make their own stablecoin, right? Indonesia making their stablecoin. We just think it's gonna take some time for them to get there, right? If as of today you want to build a successful business, for them to do FX or trading these stablecoins, is that too early, right? That will be the question we ask. Is that they might be solving a real problem, but is that addressing a current market need? We have a very hard feeling, to invest into startups or making assumptions where the crypto market is going to be 3 years from now. So these are the hard questions we need to ask. But also the other thing we highly kind of value is also the team background. For a lot of crypto payments, or we say blockchain technologies, especially in DeFi, if you do lending or borrowing using blockchain technology, do you have the right team in place? Right? Do you have any people have a financial background? Have anybody have worked on Wall Street per se, or do you have anybody with a financial degree? It's very concerning for us to see some of the founders have, I'll say 20 years old, right, plus, have no financial background, never worked in a day in a financial institution, and doesn't even have a degree, right, in that sector. And they have nobody on the team have the pedigree on that level either. So for us, it's just not really the target team we're looking at. I think overall, right, these are really good questions. We are often nail the founders, give us answers, tell us. So I would say these are the top probably 2 or 3 questions on my mind. But also, right, you need to have a solution to be more commercialized. Basically means, are you making money with your current product? Do you have revenue? We cannot really invest in a company right now thinking about, 2 years later, we're going to have revenue coming in. we need a model building as of today. If you're able to show us, you can generate profit from your product.
Well, as I hear you talk, Tracy, what jumps into my head is we're going from selling a story, which is, I'll argue, what was happening in the previous bull run, till now, you actually have to have at least a business model and people that can execute on the model that have the competence to execute. And if they're successful, there's a real business at the end of the day that'll have revenues, that is solving a problem, that should have sustainable growth over time.
Yeah, exactly. In the bull market, right, we have seen teams don't even have a pitch deck, don't have a product, only with their names and background, just go to raise VC money. They were successful, some of them, I have to say, right? Quickly turned in this market. Not only you have to have, pitch deck is the number one, but you have to have a running product. You can be a beta product, right? You can be on the test net, not fully launched, but you have to have something to demonstrate you're capable of launching a product. You're capable of thinking about the solutions and target your, targeting what kind of customers you may have, right? So this is a very, different market right now. But also we think we've seen most of the, really, really dedicated founders are actually using this time to focus on building. They know it's hard to raise money. They know it's gonna, lower their valuation. It's not gonna be ideal. Many of them choose just to, be hands down and focus on building, making a better product. So I think that's really a good sign for the industry to start moving to a better direction.
Well, very well said. I'm going to leave it at that point because I think ultimately what I'm hearing you say is that the fundamentals are now being implemented, and the froth, the hype, the selling the story was yesterday's news. And that's a good thing for the industry, and it's a good thing for investors on a go-forward basis. So again, Tracy, I thought your insights were extremely helpful. I got a lot out of this. I do see another question, but it's one I can actually answer. S, I don't know who S is, but he says he or she wonder if there will be a recording of this podcast. The answer is yes. It gets posted on YouTube, and that will be made available shortly after this live broadcast. So I'm going to ask Jerry to go to the next slide, if you would. So those that have joined other podcasts prior to this one will recognize this slide. So why do we put this up here? Frankly, a portion or a part of what Bridgepoint does is provide advice and counsel to wealthy investors. And I affectionately refer to this as the playbook. And essentially, this three-legged stool are things that people should pay attention to and act on. So let me just briefly highlight this. So your net worth, which is really your investable assets, which everybody knows, it's what is listed in your brokerage statements, your fidelities, etc. It's also your non-investable assets, things like your home, your car, your jewelry, etc. The combination of those two items is your net worth. However, your net worth needs to be protected. So things like trust and estate planning are an important tool that people use to do different approaches. I like to say build a financial moat around your net worth, because there are things you can do to protect your assets. And that's something we help people with. There's also tax planning, and I emphasize the word planning as opposed to preparation, because now that we're into tax season, it's about preparing taxes, not minimizing taxes. But done right, there's some tremendous value that can actually be documented to the penny in terms of tax planning correctly to minimizing your tax burden, which everyone is within their legal rights to do. And there's some really successful strategies that we help people deploy to minimize tax burden. And then lastly, there's insurance. And we are not insurance brokers, but I can promise you there are certain insurance products, particularly something called private placement life insurance, PPLI, that done right creates a tax-deferred vehicle to wrap your tax inefficient assets around to defer taxes. So the reason I put the red box around this portfolio diversification is because there'll be people on this call that made money in crypto, probably a lot of money. And then last year, they watched a lot of that wealth get destroyed because they didn't diversify, they didn't hedge. And if nothing else, please take this away. If you have all your eggs in one basket, you're not diversified, and that's way too risky. Don't do that. At a minimum, there's something called a barbell strategy where you have at one end of the spectrum something very risky, and at the other end of the barbell something very conservative, so that the combination of the two can help preserve wealth. But either way, things like hedging your exposure, there's definitely things to do if you have a concentrated investment allocation that you can do prudent things to de-risk your portfolio. So we are here to help people in these areas. If you'd like to learn more about it, just let us know. And finally, the last slide is our contact information. So Jerry, if you don't mind, would you go to that? Okay, so you have my email contacts, you have my co-founder Nadia's contacts. If you want to reach out to Tracy, we'll be delighted to connect you. But again, we're here to educate and be helpful. And hopefully you got as much out of this podcast as I did. But Tracy, let me just say on behalf of Bridgepoint Capital and our audience, thank you for an amazing session. And I certainly got a lot out of it. So thank you.
Thank you so much. Thank you so much, Mark, for hosting this and inviting me. I think it's a great pleasure actually sharing our thoughts, our approaches for crypto, right? I'm a huge advocate for this industry. So anytime, if you want me to share any of the knowledge, happy to do so.
Well, be careful what you wish for. But again, I appreciate the offer, and we'll certainly take you up on that, and we'll see you again soon. And again, everyone, thank you for participating on this call. We look forward to seeing you on our next podcast and hope you have a great rest of your day. So thank you.